Hi there. It's a beautiful windy day today in Winnipeg. So I hope everybody who's joining us today has a nice sunny day where they are. Today we're going to be talking about record keeping and options that sole proprietors have when it comes to bookkeeping and record keeping and things that just to keep in mind. We're going to go over the importance of how long to keep your documentation, as well as what documents to keep. I'll present to you some different options as it relates to how to do record keeping, as well as some of the software that's available to our sole proprietors. So we often have clients that come in who are just starting their business and who are intimidated. They're intimidated by what to do, how do they do the bookkeeping, the records they need to keep, and just lots of questions surrounding that. So the first thing you want to keep in mind is keeping records and support for your for the document for your documentation. You also want to make sure that you're trying to keep your records as up to date as possible. I find if you kind of let it go for a few too many months, you may start forgetting things, and it just makes it a little bit harder at the end of the year when it comes time for tax filing or even for GST filing or any filing requirements for that matter. One of the main things, or something that I suggest to clients who have businesses, is to have a separate business bank account. It's not a difficult thing to get. You can just go to your bank and open one. But the reason I suggest that is so you don't have your personal and your business affairs kind of convoluted within the same account. It also makes it easier when it comes time to record keep to see what expenses were actually business and then what expenses were personal. Um, Keep in mind that any fees that would be charged from your business bank account would therefore be considered a business expense, and then you can also deduct those. When you keep your records up to date, like I said prior, it kind of minimizes the risk of forgetting. Sometimes you're going to do a deposit or that, a check deposit, and if you don't keep record of that properly, come to the end of the year, you may forget what that was for. The chances of losing receipts if you're not filing them properly every month or every week, depending on how many you have, also that risk also increases. Something that you also want to be cognizant of is your personally paid expenses throughout the year, which are deductible, even if they don't pass through your bank. So you want to keep all your receipts and for all your expenses that are business related. This will ensure that if ever CRA were to come back and review your file, which can happen, that you would be prepared to provide the proper documentation. So if you have all your receipts and all your invoices in proper order, it just ensures that CRA will be satisfied if ever they were going through some sort of audit or review of your file. I would also suggest, and this will be touched at a later session, later live as well, that you keep record of everything that you deposit. So if you're depositing a check in your business account, you want to make sure that you keep that slip, that deposit slip. And nowadays, you can even take a picture of the check, which kind of makes it easy. You can even keep the check and note on that as well. And the reason you want to do that is you want to make sure that the income that's going in your business bank account is all business income. And if it's not, you have proper documentation that you'd be able to support if you were, depositing something that wasn't business income. If you received your income tax refund and you put that in your business account, we would know that that's not taxable income. And then you'd have that documentation to back that up if ever CRA came back. I have had clients who, at the end of the year, they go through their business bank account, they take all of the deposits as sales, and then that's what they have as their sales, when in fact there could potentially be items in there that aren't income, which results in more taxable income or taxes to pay. So that's something else you really want to keep in mind. Now, you want to keep your records for approximately 6 years. So now what does 6 years after your last CRA notice of assessment? So the records you would want to keep are things like your bank statements, your check stubs, your credit card statements, deposit slips, your invoices that you've made, expense receipts. So if you go to the store and buy supplies at Home Depot, you'd want to keep that as well. And we say to keep those for 6 years after your last CRA notice of assessment. So essentially, you're keeping them for about 7 years. So current year plus 7 years. CRA doesn't, they can go back. So you really want to make sure that that's kind of all in order. After the 7-year mark, you should be okay to get rid of some of those. So in regards to how do I keep my records? What are the different options, or how do I keep records? There's lots of different options that you have, and it can be very basic or it can be very complex. And it really depends on the complexity of your business and how you run things, how you manage things. So one of the most basic forms of record keeping is to simply keep all your expense receipts and keep them in a file folder. I usually say you can separate them per expense or per month, however, as long as they're all there. And then at the end of the month, you tabulate them all up with your calculator and you put them, have a total. And then what you can do is decide what category they go in. So if it's professional fees, you'd put that under the professional fees category. If it's materials or office supplies, you'd put that under materials or office supplies. Then at the end of the year, you would take all those summaries and then you put them on one yearly summary. So Talbot Associates actually has a really nice summary on their website. If you go under our website, under the free resources, you'll see a business expense form with some of the more common business expenses. With that said, keep in mind every business is a little bit different. So you could have different business expenses and it's not necessarily right or wrong. So something to keep in mind. But that summary would be a good starting point as to how you would like to start, categorizing those expenses. The next option, which is a little bit more sophisticated, if you will, is the use of a synoptic or an Excel spreadsheet. So an Excel spreadsheet, most people have Excel on their computers, or a synoptic is just a book that you can buy at somewhere like Staples or Best Buy, and you can manually write that in. My suggestion here would be a little bit different than just taking your receipts. I would likely suggest that you take your business bank statement and then account for all the expenses on your business bank statement as they're happening. So that's expenses and income. And then you would include them through the column that they should be through, like the category if you were doing it with the tapes or just adding them up. And then you would reconcile that at the end of the month. I would always suggest having all your receipts, even if they are on the bank statement, you still want that backup. But going through the bank line by line will ensure that you're catching those expenses that you may not necessarily get a receipt for. So those would be things like parking or car washes or your monthly bank charges that are all tax deductible. I suggest this because I suggest the reconciling of your bank, because you will ensure that you catch all that stuff that you may, if you're just going through the receipts, you may miss those. So even if you are doing, even if you're just calculating your expenses with your receipts, reconciling your bank is never a bad idea. It's always a good practice to keep, and it just makes sure that everything is kind of being taken into consideration. You're not going to risk missing any of the expenses that are passing through your bank, so that's a really good habit to have. So you can do the same thing with all your credit cards. So if you have business credit cards, you would reconcile all those as well. Again, keeping all the receipts in some sort of folder. That way at the end of the year, or if ever CRA were to come back, you have all that information readily available in case of an audit. And you wouldn't necessarily reconcile the personally paid. So if you have cash paid or personally paid expenses, that's fine. You can just kind of keep those in your folder or put them in your Excel spreadsheet or on your synoptic. And then we would kind of calculate that at the end of the year from your summary. The third option that I would like to present to you is the use of a software. So there are a lot of different softwares available. There are desktop versions, there are online versions, and not one is better or worse than the other. They all have their different pros and cons. The desktop versions that are more common if you will, would be the Sage or the QuickBooks, and those ones are really out there for business owners, small, medium-sized business owners. Those are good. There are other ones as well. Like if you're a large business owner, there's other ones that are more tailored to a company. But Sage and QuickBooks are really the ones that we see most often. The desktop versions are typically purchased. You can purchase them online or in store, and I generally say they're good for a little bit, like a couple years possibly. If you're not needing to upgrade it, if you're not using it for payroll, you can usually get away with using the same version for a few years. So that's kind of a perk of doing the desktop. It's kind of a one-time fee for a couple of years. Desktop, you don't necessarily use. So if you're downloading this software on your computer, which is what we kind of call a desktop version, you don't necessarily need to use the internet. So for some people, that's really important. If you're living in rural Manitoba or a rural part of the country, and you don't have good access to the internet, or you don't have fast internet, sometimes that desktop version is a better version, or a better option, I should say. There are also online or cloud versions. So some of the more common ones are the QuickBooks Online, Sage, and Xero. Wave is another one as well. So all of those ones are there's a monthly fee for that. So you use the software and then you are charged on a monthly basis to use the software. With that said, Wave does offer a free version of their very basic software to users. So you can't necessarily, keep track of your accounts receivable or your accounts payable, but you still have that option to track it. So it would be a very simple business you'd want to put in there if you're not capturing accounts receivable, inventory, accounts payable. If you're not invoicing through the software, that may be an option for you. Personally, I find that if you're using a software, be it desktop or online, it makes it a lot easier to reconcile your accounts. You can reconcile your bank and your credit cards. And I say it's easier, but it's easier insofar as that you're putting all the information in properly and accurately. Some of the online softwares will pull the transactions in from your credit card or your bank, which then really reduces the time that you're spending with the data entry portion of it. The pros about using a software versus Excel or, just manually adding those receipts is that you can also invoice. So you can invoice your clients. You can often send them your invoices, and then you can track your accounts receivable. So you can track who owes you what and when they've paid. So depending on the complexity of your bookkeeping and your business, sometimes software is a better option than just, manually calculating your receipts. With that said, my suggestion, if you are using a software, is that you have a proper setup. So what I mean by that is that all your accounts are set up properly, that your bank account is set up as a bank account. It's not set up as, a shareholder's loan or a revenue or something like that. And I have seen that happen in the past where we get a client's bookkeeping file and it's kind of not set up properly. And what happens in that situation is sometimes we'll have to spend a lot of time really setting up the way that the account should be set up and whatnot. And then it increases the chances of error or the reports not being set up the way that they should be. The other thing that I would always suggest is making sure that if you don't know how to use the software, you have proper training or you have that support available to you. If you don't have the proper training, you're not going to do a good job as it relates to reconciling your bank or even recording the expenses. You really want to make sure that you are confident in the software. And if you're not confident, that you have somebody that you can kind of ask for help. I know Talbot Associates does technical support for a lot of these softwares. So, and it ensures that the client is getting a good financial statement, a good solid financial statement, and that everything reconciles at the end of the month or at the end of their period. If you do have questions, sometimes you can find those answers on YouTube, or there are forums online. So it's not like if you start your you're on your own regardless, but just keep in mind, you always want to have the right people kind of in your ballpark, essentially, just to make sure that you're doing everything that you can. Something to keep in mind as well before choosing your software, and this is something that we encounter lots at Talbot Associates when we onboard a client, is, are you using the appropriate software for your needs? So are you making sure that you're able to invoice? If you invoice a lot of clients, are you picking a proper software? If you're tracking your accounts receivable, is your software tracking your accounts receivable? You could do it in Excel, but it becomes a lot more of a challenge. Are you tracking your inventory? Are you tracking your accounts payable? So it's all these questions that you want to make sure that before choosing a software that you've kind of thought about, because you don't want to be, halfway through the year and then have decided, oh, this wasn't really the software that I should have used, or I didn't set it up properly, because it's just going to increase the amount of time you're going to spend doing your bookkeeping, and the potential of error or the possibility of missing out on things becomes greater and greater. So I would strongly suggest you speak with someone who's knowledgeable within the softwares that are available and who has a little bit of an understanding of your company too. Every client is different, so it's not a one size fits all, if you will. You really got to you really want to have someone kind of understand what you are trying to accomplish within your software, and trying to find out what you want as well from your software, because it's difficult to suggest one software for every client, because it just doesn't exist. It's kind of a juggling act, and we want to make sure that we're hitting as many of the points that they want to hit with the software that they're choosing. So that third option was using software. So we're going to kind of go to the last and final option, that we're presenting today, the final option that we're presenting today, which is outsourcing. So outsourcing could mean a few different things. It could mean having someone other than yourself, essentially, do your bookkeeping. So that could be an employee. So you could hire someone who's possibly your administrative assistant, who's also doing some of your bookkeeping. So that's having an employee do your stuff internally. You would then also want to ensure that they're making sure all the invoice has been included, that all the documents are being properly recorded, and that you're making sure that everything's being tracked properly, and that you're keeping all the documentation as it should be kept. It could mean having an external bookkeeper. So that could mean someone who kind of comes in every couple of weeks and making sure that everything's reconciling, that you're recording all your expenses, that you're recording all your revenues, and making sure that everything's kind of being, kept up to date. And I say kept up to date because you want to make sure that the frequency of your bookkeeping is done on a regular enough basis to make sure that, everything's looking good. You're not having to search for documents, and it makes it easier for everyone. Outsourcing could also mean having an accounting firm doing your bookkeeping. So Talbot Associates has a bookkeeping department, and we do bookkeeping for many of our clients. So we can do that on a monthly basis, or we can do it on a quarterly basis, or however often you feel that you need your financial statements. So when you have someone else do your financial statements, if you're outsourcing, let's say Talbot Associates to do your bookkeeping, we would first determine the frequency and what your needs are, and then make sure that we get all the documentation. So that would be all your bank statements, all your credit card statements, all your cash paid expenses, any shareholders loan, anything like that. And then we'd kind of compile that all in, and we'd prepare you interim financial statements. So it wouldn't necessarily be a year-end financial statement, but it would be the interim. So it would be what happened from this current year to date, or for the month. I want to also kind of touch on the importance of a financial statement. So, or at least financial statement, or knowing where you're sitting for your profit and loss in the year, and your balance sheet, like the financial statements as a whole. There's a huge benefit in having that up to date, because it's going to allow you to really make good, strong business decisions. So if your financial statements are like solid and are well done, it's going to allow you to really make decisions based on the numbers, and it's going to allow you to see where you're sitting, and it's going to also allow you to maybe switch gears. Sometimes if you're trying something out and it's not working well for your company, it's going to allow you to kind of say, oh, this has to change, let's change this. So one of the reasons we always say keep it up to date is because you're going to be able to see if something's working for your company or if something's really not working for your company. So if we have a client, we'll often make recommendations or we'll bring things to their attention that will kind of make them shift gears as it relates to daily operations or even just some small things that they're doing. The financial statements will also allow you to see if you're tracking your accounts receivable. It's going to allow you to see if people, what your accounts receivable is at. Is that becoming a problem? Same with your accounts payable. Is that becoming a problem? So it's all these things that you really want to kind of take into consideration when you are thinking about record keeping. So from the 4 options that I've presented today, so you have just your basic form, which is just calculating, your receipts that you have with your invoices and putting on it on a summary, bringing that to us when it's time to file your taxes. That's number 1. You then have the use of a synoptic or an Excel sheet. At that point, you could start that's when you could start reconciling your accounts, your bank account or your credit card account. You then have the use of software such as QuickBooks Online or QuickBooks Desktop if you wanted to use desktop, or you can outsource. So those are the 4 options. And the other thing too that I would like to keep in mind is we do have some clients who kind of do a mix of those. So they'll do some of the bookkeeping themselves, some of the record keeping themselves, and then they'll have us kind of prepare the financial statements for them. The benefit of that is you have someone kind of overlooking your financial statement and making sure that everything is kind of looking good. If there's something that has to be brought to your attention, you kind of have that specialty or the look. They're going to look for those quirks that you may not notice. So that's kind of those are kind of the options available. So if ever you want to do some of it yourself, but then outsource it, that's definitely an option as well. So sometimes people will do the 3rd and the 4th option in combination with each other, and that's a great option as well. At the end of the day, I just want to underline that a good and accurate bookkeeping, it may not ward off CRA audits, but if it does happen, you're going to be in a really good position to defend those expenses that you're claiming. So you want to make sure that you have all of your receipts properly categorized, that that you have them available. So if CRA ever does come back, then you're prepared for that, and it's not going to be a big tedious task. You're going to have all that information readily available for them. The other thing is that business owners will have tremendous management. It's a tremendous management tool that could really impact your profits in having a good set of financial statements and having the right people on your team to help you read those financial statements. So if you're not able to read those financial statements, find someone who can help you read them, because you're going to really find that it's going to allow you to make better business decisions or good business decisions. And it'll really teach you how your company is doing. Sometimes it's surprising when you look at financial statements versus what's actually happening versus when you're looking at your financial statements. Sometimes we do have some clients who are surprised, but that's going to be another session for another time. So stay tuned for that one. So that's basically the options you guys do have as it relates to record keeping, or some of the options anyway. If you guys have any questions, now's the time. So I think Kayla may have some.
Hey, Em.
Hey.
So it looks like we have no questions from chat at this time, but you gave us a really great overview of some of those softwares and options. Between the 2 popular ones, or the ones that a lot of people ask about, QuickBooks Online and Excel Sheets, which one would you suggest?
So like I said previously, we're really going to look at each company as individual. So I can't say one's better than the other. QuickBooks Online definitely is a very powerful software. You can do a lot of things in it. So you can track your accounts receivable, you can track your accounts payable, you can send invoices. There's all sorts of things you can do that Excel may not allow you. Like you can't, send an invoice directly from Excel to a client easily. So it's not that one is worse. You can likely accomplish everything that you would need to in Excel, but QuickBooks Online makes it much more easier, and it's a much more powerful tool. So depending on the size of the company, is usually what we would look at in the transactions. QuickBooks Online is a fabulous tool, but we do have some clients who can get away with simply using an Excel spreadsheet.
All right. So it really comes down to the right tool for the job.
That's exactly right.
Perfect. All right. Well, you mentioned outsourcing for your bookkeeping. What kind of fees are associated with outsourcing?
So again, it's going to depend on the company, right? So what we do is if we're looking at a client who would like us to prepare their bookkeeping, we're going to look at the company as a whole. We're going to ask them, what do they need? So if I have a client who wants us to track their accounts receivable and their inventory and their accounts payable, we're going to come up with a plan for them based on their needs. It's also going to depend on the frequency. So the more often we're providing financial statements, the more complex their plan then becomes. If they're just wanting us to, do it once a month and they have one bank account and it's quite simple, those fees will be, reflective. So it's really hard to say how much a fee is for someone because it's really dependent on the company, on the business.
All right. Sounds good. Looks like we have no further questions at this time.
Excellent. Thank you. Have a great day, guys.